Have you ever wondered what PPF is and how it can benefit you? PPF, short for Public Provident Fund, is a long-term savings scheme introduced by the Indian government. Its primary purpose is to provide a secure, tax-free savings option for Indian residents. A notable feature of PPF is its tenure. It comes with a lock-in period of 15 years, but fear not, this can be extended in blocks of 5 years after maturity. Now let's talk about interest rates. The PPF interest rate is set by the government and is typically higher than that of savings accounts. Not to mention, it's compounded annually, so your money grows faster than you might think. One of the key attractions of PPF is its tax benefits. Your contributions to PPF are eligible for tax deductions under Section 80C of the Income Tax Act. What's more, the interest you earn and the amount you get upon maturity are both tax-free. The minimum annual investment required in a PPF account is a modest 500 rupees, and the maximum allowed is 1.5 lakh rupees. This makes it a viable option for both small and large investors alike. From the 7th year onwards, you are allowed to make partial withdrawals from your PPF account, subject to certain conditions and limits. This offers some liquidity during the tenure of your investment. Also, your PPF account can be transferred from one post office or bank to another, offering you the flexibility to manage your account as per your convenience. But like any other financial instrument, PPF comes with its own set of limitations. The 15-year lock-in period may not be suitable for those needing access to their funds in the short term. The liquidity is limited, and the annual contribution is capped at 1.5 lakh rupees. The interest rate, though historically attractive, is subject to change by the government. Once invested, funds in a PPF account cannot be easily redirected to other investment opportunities. For non-resident Indians, PPF accounts lose their tax benefits and the interest earned becomes taxable. There's also a slight risk of policy changes that could affect its attractiveness or benefits in the future. Despite these demerits, PPF remains a popular savings avenue for many due to its tax benefits, safety, and long-term wealth accumulation potential. Opening a PPF account is a straightforward process. You can approach a post office or a bank, fill out a form, submit the necessary documents, and you're good to go. In conclusion, PPF is a robust and dependable investment instrument that offers a healthy mix of safety, returns, and tax benefits. It's a versatile tool that fits well in the financial toolkit of any prudent investor. So, weigh the pros and cons, consider your financial goals, and decide if PPF is the right choice for you.